Yes, my people, welcome back to another video. It's your boy Ori Capitals again. Finally back with the video. It's been a long time. I think the last time I posted was 3 months ago. I posted a screenshot of someone on the screen. Yes, so this is going to be my first video of 2025, and this is going to be a breakdown of a trade I posted on my Telegram. It's going to be somewhere on the screen. Make sure you click the links in my bio so you can join my free Telegram on the channel where I post my daily setups and breaks down and ideas that you can make use of in your day-to-day trading. And obviously, you want to learn from me. You can follow my Instagram where I'm more active with what I do on a day-to-day basis, fundamental analysis and stuff like that. So yeah, make sure you check all these links out in the links below. But today's video, as I said, is going to be a breakdown of GBPUSD. Without further ado, please don't forget to like, don't forget to comment, don't forget to subscribe to the channel. The aim for this channel is to get to 500 subscribers at the end of this year, which I know is more than easy for us to be done. I think we are at 370 subscribers at the moment. So please continue to support the channel, continue to support the channel heavily so that we can get our subscribers, also we can get more engagement, and I can also bring in more value to this channel as well. Yeah. But without further ado, let's get into today's video. Now, so as you can see, we're on a 1 hour time frame on GBPUSD. So the first thing that we always need to make sure we need to clarify on is what is the market structure that we're currently in. Now, so as we can see, price has been very bullish to the upside. We can see price is always creating new highs and failing to break new lows. So as we can see, price is always creating new highs here. So this tells me that price is in a bullish structure here. Now, so the current trend is we can see price started to retrace a little bit to the downside here. And obviously, this is many reasons why it causes price to reverse to the downside. As we know, there's a lot of tariffs talks and a lot of Ukraine and Russia war. These are all fundamental news that affects market prices, and obviously how institutional traders view these things can influence their positions that they put in the market. So we can see that price has been very bullish, but obviously starting to reverse from the high here. As we can see, it's been reversing to the low. Now, since we know this was the last sort of structural low that caused the high here, we can see, and since then price hasn't come back to this main demand zone here, like I would call it. So we can see this was the last demand zone that price created for itself before pushing to the upside and creating a new highs, as we can see, which is something that has been happening throughout the trend, as we can see here. So this tells me that GBPUSD was quite very bullish here. Now, the next thing that I realized that since we know price is growing the bullish structure, the only way that I would then change my sentiment from bullish to bearish is when price closes below this area of demand zone here. Now, why would you say this area of demand zone? It's because this area of demand zone is a very high, probably solid area of demand zone, that if price decides to break and close below this area, this confirms to me that the market has changed from its sentiment from bullish to bearish structure. So therefore, we need to start looking for areas where we can sell the market to the downside. As we need to follow the trend, as we need to follow what institutional traders are doing in the market here. Now, but one can argue we still have areas of demand zone that we can sort of mark out here. And yes, I agree. But because I'm an intraday sort of day trader, I always look at the daily movement to see what makes sense for me to take during the day, rather than if I was a swing trader, I would more worried about drawing out or using the high time frame, for example, to find valid demand zones to use. Because I'm a day trader, I'm only looking for structures and then swing points and areas of demand supply zones that I can use to enter during the day session, which is the London and the New York session, these are the two main sessions that I tend to trade for myself personally. So yeah, so now we've identified that this is a very strong demand zone, here. So the next thing we want to do is we see that market on Friday closed traders. This is the difference between advanced and beginners traders, where this is separate us people, where one can identify a clean breaker structure or a liquidity trap or a fake sweep off area. So this instance, we can see that obviously price is, as I said, retracing to the downside. Price has come to our demand zone first of all. It respected it, however, pushed to the upside a little bit, but then price respected this area of supply here, as we can see, meaning that there's a strong push coming from the sellers, institutional traders, pushing market price to the area of demand zone again. Now, one may argue that this is definitely a sign that obviously what do you call it? This is, one can argue this is a sign of bears starting to finally take over the market, and we're going to see a bearish or downside movement. However, we always need to ensure that if price is going to the downside, we need to make sure price closes below our area of demand zone, which is the most important thing that traders always need to understand. But obviously, we can see that on Friday, price failed to close below this demand zone here, which is the number one rule that which is one of my first thing that I identified as a confluence. So the next thing is to do is then see what price did at the end of Friday at 10 o'clock. So we can see price failed to close below this low here, which tells me that price has not fully confirmed that it's changed its sentiment from bulls to bears. So therefore, the next thing that I want to see is what happens to the next, where is the next area that we can maybe confirm whether we are in either a bullish trend continuation, or we're most likely going to see a continuation to the downside, creating a full breaker structure, confirming that we're in a bullish, confirming we're in a bearish structure. So yeah, so now we can see that price pushed to the downside here, but because this candle pushed to the upside before pushing to the downside, this candle will be our lower high. So we can see lower high, lower low, lower high, lower low. Now, because now the thing is, if you go on a lower time frame, this will be much more clearer picture, because obviously the lower time frame will have candles that has shown you the trend from from up, down, retracement, and down again, which is what I'm showing you. So lower high here, lower low to the bottom here, another lower high, and a lower low. So this confirms that this is the last swing high that price caused before the push to the downside into our demand zone again. So this is very, very important. That's something that us traders needs to pay attention to. You always need to pay attention to the internal price action that's causing the trend, or causing the breaker structures, or causing a change of characters. So now that we've confirmed that price has failed to break past this demand zone, and this is actually just a sweep of liquidity. So a lot of people have their stop losses below this area. So if you're a rich entry trader, you would have your entry price here, and your stop loss just below the wick of this candle here. Without waiting for any confirmation, now you'd have been stopped out. So again, because we didn't enter from this area of demand zone, we then now waiting for confirmation, and now we've got our first confirmation. Price failed to break past the demand zone, confirming that it's just a sweep of liquidity. It's not actually a change of character or break structure. Therefore, and price has reversed to the upside, breaking past the last lower high that causes the lower low, which is very, very important. So then we're starting to draw up a actual, picture here of what the trade will most likely be. And the next thing that we're going to see is we want to see price fully close above this swing high of this wick here. So we can see that price actually closed above this swing high here, which is another confluence that I always mention to you guys, to always see a close above your swing high. If there's no actual candle close, I wouldn't consider that a break of structure or a change of character in this sense, wherever it applies to your scenario. But in this sense, I would consider this a change of character actually. So as we can see, this is a nice change of character. Now, the next thing to do is identify the candle or the area that price is most likely to retrace back to, the magnetic zone that price will retrace back to, before we can see a continuation to the upside of the trend, as we confirm that this trend is still quite bullish. Even though price is retracing to the downside, we can confirm that price is very, very bullish. So this is the confluences that I was able to apply in this chart, and this obviously in this chart on a 1 hour on Gbpusd. So the next thing for me to do is then identify that candle or that area of interest, and identify that this area was the area of interest. Because I believe that, again, it's always the internal structure we have to take in consideration when we're looking at time frames for confirmations, or for things that we can use as a confluence to confirm that, okay, maybe this is in line with what I'm looking to expect, or what I'm expecting the market to do. So this is the last area of sort of I guess swing low before price pushed to the upside with huge momentum to the upside, creating a new high above this swing high here, as we can see. So this would be my area of interest. So I'll mark this as my demand zone here. And then this will be my entry. So my entry price will just be above the wick of this candle and the swing low of this area here. Keeping my, SL very tight. So just below this swing low here. And then our first take profit will be this area here, because this was, it was this area here, because this was the last candle that we can see that price had before pushing to the downside and creating new lower low here. So it's very, very important that we mark out, as this is my candle that I would then use as my take profit to, take out a nice profit on my trade here. So I think it was 4 hour trade, I believe, because my stop loss was quite wide. And because obviously when you normally set a trade on the Asian sessions, the spreads are quite high. So if your stop loss is very tight, you end up getting stopped out because of how high the spreads are during the Asian session, which is why I then decided to pull my stop loss a little bit to the bottom, giving my trade a room to breathe, and also ensuring that I don't get stopped out because of spreads, not actually because of my trade or my analysis was wrong. And and like I said, by these few confirmations that I had in mind and all these things that I did, I was able to confirm that this setup was a valid setup, and it made sense for me to post it on my Instagram to show the guys of what I'm looking at on GU. And like this, we can see price went in our favor. So let's just have a look. And just like that, TP has been hit. So again, these are very, very, very simple, rules of engagements that you can apply, people. It's always very important to identify the structure you're in, whether it's a bullish or bearish structure. Again, look for the current demand zone that where price is retracing to or where price is at. Confirm if price has respected the demand zone or the supply zone. If price have respected the demand zone, and how do you know? If price bounce off the area of the demand zone and pushes back to the upside, or price, rejects when it comes to that demand zone or that supply zone that you're looking to enter trading in. In this case, we can see price failed to close below our demand zone, meaning that there's a change or there's a huge bullish pressure coming from institutional traders, buyer positions to push price further. And obviously this was more of a fundamental trade, because obviously we have the EU and the United Kingdom had a summit where they were talking about increasing the defenses or their soldiers, basically the defense force, because of how things are going with the Ukraine and Russia war. So this obviously pumped up the GBP compared to USD, because this made GBP bullish and USD weak, as the European Union and the British government came together to, increase their spending on defense to make sure that they're sort of in a good position in case of wars and all these sort of things. So yeah, this is one of these fundamentals that influence price to push price to the upside. And I capitalize on these factors with my technical analysis that I use to then find the setup. So yeah, hopefully you guys enjoyed this video. It might be a long video, but nevertheless, this is my first video back in 2025. So yeah, I hope you enjoyed the video. Once again, please don't forget to like, don't forget to comment and share and subscribe to the channel. Like I said, we're on our way to 500 subscribers. The least you can do is click the like button, share this video, and subscribe to the channel. Now, it's been your boy, Gbpusd, and I'm out.